Welcome, everyone. My name is Ara Tapuzian. I am the Executive Director of Michigan Venture Capital Association. And good morning, good afternoon, wherever you are. We're obviously, most of this group is here in Michigan and actually one in California. It's a pleasure to be part of this today. I'm joined with my co-moderator, Scott Hipaka, who's with the Michigan Israel Business Accelerator. Scott's going to talk in a second too about his organization and why this summit is very important to him and his group. I just want to really sort of set the stage about venture capital here in Michigan. So real quickly about MVCA. We're a trade association, membership based, and our members are in the Michigan investment, VC and angel investors, community, university partners, corporate venture firms, economic development organizations, and service providers. And we act as the voice for Michigan entrepreneurial and investment community, and a few things of what we do. We're a trusted resource for venture capital and angel investment data. We're an advocate for policies that encourage innovation and reward long-term investment. And then we convene the entrepreneurial community and provide connective components for its members through communications, marketing, and member engagement. So every year we put together a research report that gives an overview of the activity from the previous year in venture capital in Michigan. So I just want to give you a quick snapshot that we've got in our report to sort of set the stage. So this is data from 2019 that we released earlier this year. So in Michigan, there are 26 venture capital firms. We've got 80 venture capital professionals, over 1,300 angel investors, and that represents $2 billion of venture capital invested in 71 startups this past year, which also correlates to $4.3 billion total for capital under management. We have 144 venture-backed companies. And the one stat that we certainly like to talk about a lot is really the comparison between dollars that are invested from within the state versus what comes in from out of state. So for every dollar invested in Michigan, a Michigan startup by a Michigan-based VC firm, it's $46 of investment from outside of Michigan coming in. I should qualify that by saying that big disparity is sort of representative in one deal that happened out here in Michigan. If you were to pull that deal away, it's still, it's $12, which is it's definitely higher. So there's definitely interest in Michigan. We're not, like we'd like to say, we're not a flyover state anymore. We're certainly not comparable to the coastal regions, but we're small and mighty, if you will, for venture capital in Michigan. So I wanted to just sort of set the stage for a little bit of how venture capital works in Michigan. I'm going to hand it to Scott. Scott, would you like to talk a little bit about your organization?
Sure, I would love to. And good morning and good afternoon to my friends in Israel and to the folks here in the U.S. Thank you for taking the time and for joining us. I'm Scott. I'm the CEO of the Michigan Israel Business Accelerator, and we're responsible for building bilateral partnerships to support job creation between Michigan and Israel. We're a rare organization across the state in that we are, or I should say across the country, just because of how we're so laser focused on building partnerships between Michigan, between one state here in the US and Israel. And what that has created really is opportunities. We're really excited about today and about the Industry 4.0 opportunity for what this represents to the Michigan and Israel ecosystem. A couple of fun facts here, just from an economic impact perspective. When you consider Michigan in the manufacturing space, almost 20% of Michigan's GDP is derived from the manufacturing industry, and so think about what that means from a Industry 4.0, for the future of Industry 4.0, as you think about Israel's leading global role in Industry 4.0, and when you overlay that with Michigan's manufacturing space, it is pretty significant. From a job perspective, Almost 14% of the workforce here in Michigan is employed in the manufacturing space. So again, a lot of opportunity here. And then when you kind of dissect that a little bit, you think about small businesses. Here's something that's also really important, because as here in the US, and particularly with our guests today from the venture capital and the investment capital world, they know that a lot of our small businesses are really, that's how businesses is started. Every business generally starts as a small business. And when you consider that opportunity, almost 90% of the exports in Michigan are small business derived. So 1 in 6 jobs in Michigan are tied to the manufacturing industry. And when you, again, think from a compensation perspective and economic impact, the average compensation in the manufacturing for a manufacturing job is about $80,000 a year. So that's pretty good. And it's spaced out across multiple industry segments. Of course, when folks think Michigan, they automatically think the automotive industry. And that is the leading job creator, obviously, from the standpoint of the manufacturing space. But here's some other interesting jobs that folks don't always think about. You've got the metals manufacturing, you've got machining, food and beverage manufacturing is ranked 4th from an economic impact perspective in the manufacturing side. Plastics and rubber, bioscience, so kind of, that health and life sciences, biosciences, furniture manufacturing. Michigan has a significant economic impact globally with our manufacturing in the furniture industry. Chemical, computer and electronics, and then of course defense. And so lots of opportunities in the defense manufacturing space here in Michigan. So just wanted to kind of frame the overall opportunity here and what that represents just from a bilateral partnerships perspective between Michigan, between Israel, and between the US, and what that represents globally as we consider Industry 4.0 and where we're going as partners and as a state. And so I'm excited about our guests today. They all represent a significant amount of what I would kind of define as surgical expertise to be able to really define and describe the opportunities that they see, and that in some cases they invest in. From a future and forward-looking opportunity. So I'll flip it back to Ara. We're certainly happy to take any questions that anybody has. If they want to put them in the chat as we go, we'll address those probably at the end. But again, we want this to be a conversation today, and we're really excited about what this Industry 4.0 conference represents, and to be able to speak to all of you today. So Ara, back to you.
Great. Thanks, Scott. And that's a great setup. So what we're going to do is real quickly just kind of go around to talk to our guests. And so I'm going to ask each one of them to tell us who you are and the organization that you represent, and maybe a few words about your organization. I'm going to start with John Ebsmeyer, who's the CTO at Lear Corporation. John?
Good morning, everybody, or good evening, or good afternoon. Thanks very much for having me. I'm John Ebsmeyer. I'm the CTO at Lear. I have a 25-year history in automotive and tech. I classify myself as a geek and a gearhead. But Lear Corporation, a little bit about Lear, we're a large automotive technology supplier to car makers like General Motors, for example. We have 245 manufacturing plants around the world, 160,000 people. We have 9 plants in Michigan, but we also have an innovation team that spans the world, including in Israel as part of our Lear Innovation Ventures, which is part of my purview as well at Lear. Very excited to be here. Given all of the manufacturing effort that we do, we see Industry 4.0 as a huge opportunity for the automotive industry. So thank you again.
Great. Thanks, John. Adrian Fortino. Adrian is the managing director at Mercury Fund here in Michigan. Adrian?
Thanks, Ara. Hi, I'm Adrian. So I'm a automotive engineer turned startup founder turned venture capitalist. And so at Mercury Fund, we focus on a number of different industries and sectors, but I actually came to the fund many years ago to build up the Industry 4.0 platform. And so, we're early stage venture, so seed in Series A, and tend to be focused on the middle of the country here in the U.S.
Excellent. Thanks, Adrian. Doug Neal. Doug is the managing partner at eLab Ventures. Doug.
Hello, everyone. Great to talk with you. Yeah, I've been in the tech industry probably more than 30 years, both as an entrepreneur, internet executive, and then the last almost 10 years as a founder and managing director of eLab Ventures. We're an early stage seed venture capital fund with offices both in Michigan and in Silicon Valley. And we focus on a lot of the technologies related to Industry 4.0, whether it's AI, internet sensor technology, cloud compute, cybersecurity. We tend to be the first venture capital into early stage companies in the seed round. We tend to lead the deals whenever possible. And we're looking forward to getting to know a lot of the synergies between Israel and Michigan for future Industry 4.0 opportunities.
Thanks, Doug. And Matt Chen, who is the president of GM Ventures. Matt?
Yeah, so thanks, Ara, and hello, everyone. Let me take a couple minutes to introduce myself and then talk about General Motors and GM Ventures. First of all, I am the Executive Vice President and Chief Technology Officer for General Motors. I'm also, as Ara indicated, the President of GM Ventures. General Motors, I think, is a pretty well-known household name. We are one of the largest OEMs, automotive OEMs in the world. We're number one in North America, number one in South America, and number two in China. And we have about 164,000 employees worldwide. GM Ventures was founded in 2010, so we have our 10th anniversary this year. We're a small team, and we're focused primarily as a strategic investor in the areas of advanced propulsion, connected vehicles, advanced materials, sensors, processors, and memories, manufacturing technology, as well as value chain and business model. And we've made several very successful investments over the past several years, both in the United States as well as some companies in Israel. Thank you.
Sorry, I think I was muted by mistake. We all do that once in a while. Thanks, Matt. So as Scott indicated, we're going to really just jump in here. And folks, if you've got questions that you'd like to ask of the panel, there's a chat function here where you can do that, and we'll definitely try to get to that. But I guess the first sort of broad question would be to each of our guests is what excites you when you consider 4.0 Industry 4.0 in Michigan? What opportunities do you see and what challenges present themselves? Who'd like to tackle that one first? John, I'm going to pick on you because you're unmuted.
Okay, yeah, no problem. I mentioned the number of manufacturing plants, but just to give some color to that question, we manufacture over 40 million seats for cars per year. We manufacture over 500 million components for seats for cars per year, and over 200 million electrical and electronic components for vehicles every year. So if you think about the manufacturing complexity in that, there is a lot of optimization to be had. And so what excites me about Industry 4.0 is that finally the technology is really becoming mature enough that we can deploy it at scale. And so we see that as a chance to optimize our manufacturing capabilities. And if you think about it, I've spent a lot of my time on autonomous driving, connectivity, electrification, et cetera. And those are the same technologies that are now coming into Industry 4.0 with sensors, with data backbone, with computation capabilities, with automation, with robotics, et cetera. There's very many synergies between product and process innovation with Industry 4.0. So for me, it's extremely exciting to see also the global community and ecosystem coming together. I live in Silicon Valley, but I work in Michigan. I also have worked with Israel for many, many years. So seeing this global community work together towards a common goal is exciting as well.
Great. Thanks, John. Doug?
Well, I thought it was great to hear John say that we're now at a point where things are starting to be mature enough to scale, and that's something we wouldn't be able to say 5, 6, 7 years ago. So things have certainly changed quite a bit. We tend to look at the early stage, very new disruptive tech, and the things that we're getting excited about are kind of there's so much deployment of AI and machine learning on very dedicated, narrow applications, and they're proving out to be very successful and very useful. But we're looking for next gen where we're starting to get a little bit more flexibility into the AI platforms that can come to market with less training data faster and be able to adapt, especially in the physical world, to the complexities of the physical world, right? That it's a little less fragile than the very narrow machine learning AI that exists today. In addition to that, lower power edge, as AI gets more to the edge and is more functional away from high computing power platforms, innovative technology and chipsets, energy consumption, and algorithms that can work there. I think that's going to be really exciting over the next few years.
Excellent. Adrian?
Yeah, I'm going to kind of expand on two things that both Doug and John touched on. So I was there for the dark ages of 4.0. I've been doing this since like 2014, and my God, was it difficult, right? So much tire kicking, so many pilots, right? Just, let's try this, let's try that, but nothing really, just innovation budget throwing at companies. And honestly, to the point that adversely affecting some startups because they thought they had something, but it wasn't really there. There wasn't buy-in. We have crossed that chasm, right? We are now here, and John and Matt and those companies are now embracing platforms in a way they haven't before. So Doug and I actually have a co-investment, a company called Sight Machines, great example, leader in manufacturing analytics, right? And they are now to the point that they are establishing their past pilots. They go in full enterprise engagements with big companies now, and they're you don't have this sort of, we call it the pilot purgatory. So that adoption cycle, even though this is more practical than probably the kind of heavier detail, that adoption cycle is the most important thing when it comes to 4.0. We needed to accelerate that. We needed to, and actually what's happened, COVID has been the accelerant. COVID has been a catalyst in many ways, right? Because John and Matt, they need to have access to their plants from where they are. And that's why, that's been the adoption sort of accelerant in spades for Sight Machines specifically. But that's been, why I am so excited about this. It's just taken too long.
Well said, Adrian. Matt, anything you'd like to add to this?
Yeah, absolutely. Clearly we view manufacturing as a competitive advantage for us as a company. And when I talked about the 6 key technology areas, indeed, one of them was manufacturing technology. So Industry 4.0, I think, is really, really coming to being over the last several years. One of the areas that we're most excited about is collaborative manufacturing. So rather than, days, years ago when we were thinking about Industry 4.0, being a lights out factory, we're really thinking about people working intelligently, collaboratively with machines through AI and machine learning to make the whole thing really come together and become a much more seamless and productive and efficient experience for our workers as well as for our business. So lots of exciting opportunities in the space. We have invested in some companies in this particular area because one of the, frankly, I think the advantages of corporate venturing is when we see a technology that's attractive, we can really enable the startup by becoming a first user. And by becoming a first user and validating that technology, then it gives that company an opportunity to seek out more clients and really grow very rapidly. It's a very synergistic, I think, impact.
Thanks, Matt. So we did get a question, and I'm going to ask it now because it's a good one, and I could see that with a bigger panel like we have, we're not going to get through a lot of the stuff that we'd like to get through. But this really goes to Matt and John, and we'd like to know, how does GM and Lear look at their relationship with the VC communities?
Yeah, so maybe I can just elaborate and continue a little bit on what I was mentioning earlier. We view it as really, really very synergistic. One of the wonderful aspects of, sort of being a corporate VC, if you will, tied to a large corporation is we also have a very large base of experts. So we help guide the venture companies. We might find an interesting technology, and then by getting our experts involved, they're in a position to really evaluate whether that technology really fits the needs of industry or fits our needs or not. We can help provide them guidance. We can help tailor perhaps a solution to be a better fit, and then become, as I mentioned earlier, a first user, a pilot, a guinea pig, and eventually an evangelist, going out there and really talking about the advantage of this particular company and what they have to offer, and really helping the company grow, I think, much more rapidly and successfully.
John?
Yeah, thank you. To add on to that, I think about venture capital and the startup ecosystem as outsourcing R&D, if you will. So, we have our venture capital team, Lear Innovation Ventures. We have LP positions in a few funds. We also partner with startups and have direct equity investments in startup companies, including even Industry 4.0. We have an investment in a company called Software, WEAR, that is trying to automate sewing, for example. We also partner with tech companies, large and small, and all in the effort of commercializing or finding real business impact from these technologies. So we can't just innovate or invest for the sake of it. We have to actually look at these things as ways to optimize our business and create results, whether it's to the top or bottom line. Obviously, Industry 4.0 has a big impact on profitability, and that's how we gauge and judge. But with VCs in particular, it's the opportunity for us to get massive amounts of deal flow, to see companies, see everything that's coming at a very early stage to a semi-mature stage. And then on the flip side, as Matt indicated, we help the VCs tremendously in with our expertise and with our opportunities that we have, problems that we need solved for them to look for opportunities to invest. But I would say it's a deep collaboration with the venture capital community around the world.
Excellent. Thanks, Chen. So how do each of you evaluate new technologies in the industry sector? Adrian, I'm going to ask you first, because you've got that background a little bit. I'm curious.
Sure. So when we think of 4.0, given our experience, we think about it as what's the value that it can provide at scale? Like how much in the way can it increase in savings and efficiency, in productivity? And then if it's a really meaningful and substantial, what we would think of as TAM, total addressable, we then look at that adoption, right? And say, is this an initial point solution, or is this a platform? How will it start with a vertical focus in automotive, or can it be more of a horizontal and touch a number of different manufacturing or industrial applications? And that's the kind of prioritization that we would look at. We kind of like the idea of being able to establish a beachhead in a vertical and to show that use case, and then be able to kind of expand from there. So it's got to be a really, really massive effect, right? It can't be just a kind of a small sort of point solution. And it's got to have the ability to show some value, likely in a vertical focus first.
Okay. Anybody else like to add to that? If not, John, go ahead.
I was just going to add to that from a strategic perspective. Obviously, the financial VC investment is important, and we don't want to invest in or partner with a company that's not going to be able to scale. But from a strategic perspective, often what we look for is the team to start with. The leadership team, the management team of a startup is often critical. Well, not often, always critical in its potential success. The underlying technology. And then one important fact, and this goes back to something Adrian kind of mentioned, but the maturity I mentioned as well, but the need to be able to industrialize these technologies. So, it's one thing to use a development kit on a Raspberry Pi or something like that, but you can't deploy that in a plant or at scale in particular. So figuring out how this technology, at what stage it's at, and how does it make it to prime time, if you will.
Excellent. So, we're getting toward the end, but there's, like I said earlier, there's a lot of questions that we can certainly ask, but one that I think that we need to certainly ask, that will hopefully have a life of its own because we're recording this, is, what tips do you have for Israeli startups that want to connect with the Michigan market, particularly now in a COVID world? Doug?
Yeah, I'll jump in. I think, one of the silver linings of COVID is that it's really brought this remote working to a mainstream level, right? It's always been somewhat prevalent in the tech industry, but now, as our panel can already attest to, it's remote working is much more normal. In fact, the data we're showing or reading is that 50% of employees after COVID will continue to work from home at least part of the time. So this creates new opportunities for multi-geographic engagement with startups, I think. And I think if Israel startup companies want to connect into the Michigan ecosystem, it's now even easier, probably because there's more of a general receptiveness to remote than there was before. It's all about connections. And I think, as John said, it's about people, right? Even though we're all about tech, it's also about the people and the connections. So reaching out through Scott and through your connections to the MPCA and to the people on this panel as an introduction is the first step, right? And then making sure you research the background of the person you're going to connect with to make sure they're a good fit, right? So if you're going to go for gaming tech, you wouldn't reach out to us, but if you're doing deep tech, that's a good fit for us. And just start having conversations. I do think Michigan has a unique opportunity to play, in fact, the Midwest, to Israeli startups. If you look at the data, probably about a third of the robots used in the United States are within a 4-hour drive of Michigan offices, right? Through Ohio, Indiana, and Michigan. So there is a lot of concentration of industrial manufacturing and innovation happening right here. That makes it a good place to stop.
Excellent. Well said.
If I can add one plug here, one good way I think for companies in Israel to engage, there's a tremendous amount of activity in Michigan around Industry 4.0, whether it's through venture capital or in universities, et cetera. But one in particular recently, Automation Alley started the Industry 4.0 Accelerator, which was a collaboration with Lawrence Tech, the Centropolis Accelerator, and Lean Rocket Labs. These are all local organizations in Michigan that are trying to bring a community from a global perspective to the Industry 4.0 in Michigan. So I think it's a good way for engagement.
Thanks, John. Matt, you wanted to add to that?
Yeah. I wanted to sort of reinforce what Doug said. I think one of the interesting aspects of COVID-19 is that with all this virtual connection and virtual working has really sort of leveled the playing field in a way, because it kind of doesn't matter whether you're in Michigan or in Silicon Valley or in Israel. When you get on a Zoom call, you're all together. But one of the things I do want to mention from a GM perspective is that we have a very active venture activity, pretty significant deal flow. And if you wanted to get in touch with GM, you can actually get in touch with us through our Israel Tech Center. We have by far the largest automotive OEM development center based in Israel. We've been there since 2008. We have a very robust engineering activity. We have a research and development activity. And in fact, since 2019, we have an active venture function working right out of our Israel facilities as well. So very easy to reach, and certainly welcome folks with great ideas to come and approach us.
Excellent. Well, you know what? We're running out of time, but I do want to flip this back to my co-moderator, Scott, because I know Scott's got some additional things he'd like to talk about. And maybe, Scott, you can help close this panel out. But before we do that, I want to thank John, Matt, Doug, and Adrian for being part of this. Very interesting. There's certainly more we could talk about, right? And hopefully this will spark some additional conversation. So, Scott, I'm going to hand it back to you.
Thanks, Ara. So, when you consider, I guess if you were to take today's discussion and really boil it down to one word, I think that word would really represent opportunity. I think the opportunity in the Industry 4.0 space is tremendous. Yes, we have some work to do, and we can continue to integrate 4.0 into the manufacturing world, but the opportunity that exists for partnerships and genuine collaboration, I think, is tremendous. And it's the leadership on today's panel. I want to thank all of you for what you do. I want to thank the organizers of this from Startup Nation Central for their leadership, along with Grow Ventures for what they do to support the partnerships between Michigan and Israel. And I'm real excited about, I think, what Industry 4.0 can and will mean to the future of really what is the United States and the global opportunities just to build partnerships. You know, the world we live in today with COVID has certainly changed. But one of the things I've seen as I connect with anywhere from 3 to 10 Israeli companies a week is the opportunities for Michigan's businesses to adopt and innovate and accelerate their innovation. And it's through partnerships and discussions just like this that we can get there. So thanks to all of the panelists. Thanks for everyone's partnerships for what you're doing. And Ara, I want to thank you for your leadership in pulling together this panel as well. Great group today, everybody. Thank you for your connections, your connectivity, and your overall partnership as we continue to advance Michigan and Israel's innovation ecosystem. Ara, back to you.
All right. That's it. Well said. Take care, everybody. Have a very safe rest of 2020. Bye now.
Thank you. Bye.